Tesla released Q2 2017 earnings today, and I've got your summary of the good stuff. Here's Tesla Tidbits episode number 277 for August 3rd, 2017. Year over year, Tesla increased automotive revenue by 93% to roughly $2.29 billion, almost doubling their previous year's quarter two. Gross margin on the automotive business increased by nearly 5% year over year to a healthy 27.9%. Energy storage continued the uptrend as well, pulling in about $287 million on a 28.9% margin. That destroyed the year-over-year number, where storage didn't even account for $4 million in revenue and had a near 107% negative margin in the same quarter last year. Interestingly, Tesla expects Model 3 to be non-GAAP profitable beginning in quarter four, and the company gave no hard delivery targets for any of its vehicles for the second half. This is understandable, given Model 3 is the great unknown at the moment, and it'll likely be impacting Model S and Model X deliveries until more workers can be hired and trained. On to Model 3. Since the July 28th event, Model 3 has seen a steady 1,800 net reservations per day, despite folks being unlikely to receive their car before 2019 at this point. As I'd posited before, Tesla now confirms that the first non-employee deliveries will begin in quarter four. Dual motor configurations will begin in early 2018, as will international deliveries to left-hand drive markets. Sorry, right-hand drive folks, you won't see Model 3 before 2019. Despite rumors to the contrary, Tesla confirms that the 2170 cells we've heard so much about indeed are powering the Model 3. Elon did also reiterate his confidence to reach a run rate of 5,000 cars per week before the end of the year and 10,000 cars per week before the end of 2018. In his own words, people should have zero, his emphasis, concern of reaching the 2018 production rate. Another thing that Elon mentioned was that 80% of the journalists reviewing the car ahead of the launch said they would buy the car themselves, and then the other 20% said they probably would buy the car. Lastly, on Model 3, we've heard the story long before about Model S not getting the best suppliers. Well, for Model 3, suppliers are the A suppliers and the A teams at those suppliers, which is a massive help to get Model 3 out the door. A little bit on Model S and Model X. Orders for Model S and Model X beat the Q2 rate by about 15% in July, and Model S in particular has seen a further increase in orders since the Model 3 event last week. Elon does say that Autopilot 2 software is continuing to improve, and about that LA to New York autonomous drive, well, it's still on track, but Elon says it's certainly possible he may end up with egg on his face on that prediction. On to the battery section here. Elon is hoping to have a very substantial portion of the battery pack for the South Australia project done in about 8 weeks. He stresses, though, that this is an aspirational goal. Also, Elon scoffs at the new battery breakthroughs we've been kind of hearing about here recently. He says to send a test sample to Tesla or a third-party independent lab, or he's not hearing it. He says so far that these things seem to work in the lab, but they aren't working in practice or at scale. Speaking of batteries, the Gigafactory expansion we've been waiting to hear about, Elon confirms that the majority of Gigafactory expansion will occur in the U.S., but that a factory both in Europe and China would be happening in order to drive down costs of the vehicle in overseas markets. On to Solar Roof, we got a little bit of a tidbit out of there. Installations have begun at employee homes. Both Elon and JB have it installed at their homes. Elon notes that this will follow the same S-curve that Model 3 is following at the moment for production ramp. Interesting that Tesla will have two products that should be hitting their stride at about the same time. And then lastly, a little bit of miscellaneous stuff from Elon. Elon said that right now is the best he's ever felt about the company. And then about Model Y, he was actually talked out of the brand new platform for Model Y. It will carry over much from Model 3, the same way that Model X did from Model S. But there was a question on the call about the 100-meter cable goal, and we aren't losing that despite the carryover from Model 3. And lastly, the final takeaway from the call is that the number of superchargers will triple before the end of next year. You can find all the source material I've talked about at Tesla's investor site, ir.tesla.com. This show operates on a value-for-value model. If you get some value out of what I bring you each day, please consider giving a little value back at patreon.com/Tesla Tidbits. Thanks very much to my super patrons John Waltower, Drew Schuyler, John Waller, Mark and Sarah Thomas, Ryan Scarborough, Lee Sweet, William Henry Crew III, Dorian Steve Guberman, and Bruno Quindici. If you have no extra cash, that's all right. Please show your love with positive feedback and subscriptions on YouTube, Apple Podcasts, and other services across the internet, or keep the show referral code in mind if you're in the market for a Tesla. That code is ts.la/JON4602, and it'll get you $1,000 off the car and free supercharging for the life of the vehicle. That's it for tonight. If you have feedback for me, the best way to be heard is to tweet at Tesla Tidbits. I'll see you back here again tomorrow. Until then, keep it charged and hit the road.